Hi, good afternoon, everyone. Welcome back to this discussion on audit. So, I think we have been discussing about audit report in the past sessions, and so far we have discussed quite a lot as around the reporting requirements. In terms of the audit report, we discussed that how this unmodified opinion is required to be captured, number one, and how are the various contents required to be put across in the audit report. Further, we also discussed about certain modifications. Okay, certain situations wherein the material misstatements are there. If the data is not received or if the data is received in both the scenarios, okay, as to how do you go about it in terms of the reporting requirements. Further, we also discussed that when it comes to the reporting requirements, in case of material misstatement, so there again the reporting requirements may require some changes. Okay, changes in the sense that depending on whether the material misstatement which is there, okay, so whether that misstatement is also pervasive. Yeah, so we looked at one table, therein there were certain situations we talked about it, right? So these we can say are some of the situations that we have looked at. Now what we will do is we'll just move further. We'll continue on this audit report moving further, but now we will be picking up some additional requirements in relation to the audit report. Additional requirements, you can say, are the ones wherein there's not going to be any misstatement. Okay, but the nature of matter could be such that the auditor may require to capture it somewhere in his audit report. Okay, so that's the perspective. Now, for this, there's another standard which is SA 706, which deals with some of these requirements. SA 706, which deals with these requirements, and this is what you call as emphasis of matter or other matter paragraph in the audit report. Okay, so this is how you define this. Yeah. Now, in this case, let's try to understand as to what is this other matter paragraph, what is this emphasis of matter one by one. Okay, so now what we will do is we will get on to this emphasis of matter. Yeah. Okay, so now emphasis of matter. Very commonly, this is also called as EOM in the audit report. If some of you may have heard about it, if you have dealt with this, you must be knowing about EOM. Yeah, that's how it's very commonly called. So, what is the full form of EOM? Emphasis of matter. Now, let's try to understand as to what is this reporting requirement. Sometimes, in relation to the company for which the financial statements are getting audited, during the year, or maybe for the last few years, some of the significant matters might be going on. Okay, which may or may not have been recognized. Okay, but if let's suppose they are not recognized in the financial statements, then the company may have disclosed about those matters in the financial statements. Okay, so that means something about those matters is there in the financial statements. Yeah. Now, what do you call that something as? Either that is recognized in the balance sheet, profit and loss, or in the notes to accounts, there's a disclosure around. Okay. But the nature of the matter is such the significance of such item is such that the auditor wants to highlight that. Now, what is the meaning of highlighting that? See, if you look at the financial statements will generally be running into 30 to 40 pages. Yes or no? Yeah. And if you understand it from the perspective of users of financial statements, at times they may not be looking at everything which is included in the financial statements. Correct? Yeah. To say that they are ignoring some aspects of the financial statements, we are not saying that. But it's not necessary that each and everything which is there in the financial statements, a user may be focusing upon that, which means some of the items he may overlook at times. Why? Because he doesn't understand that such item is so important. Or maybe the item or some of the areas that he overlooked may contain some area or may contain some item which otherwise is very, very important for him to understand. And the importance is such that if the auditor goes through such matter, goes through such item, then it can impact the decision making of such user. Okay, so it can have an impact on the decision making. Yeah, so you can understand that the importance or the significance of the matter is great in this particular scenario. Yeah. Now, there are a couple of things that we need to discuss now. One, what are going to be those matters? And if you can also have some examples of those matters. Two, if you say that the auditor now wants to highlight that, so what is the meaning of highlighting that matter? Okay, so both the things we'll just try to understand with the help of an example now. All right, so let's get to one example now. So if let's suppose there's a company ABC Limited. Okay. Now, as regards this company, we can say that its balance sheet size, say, is rupees 600 crore. Its revenue, let's suppose, is rupees 1500 crore. During the year, company had a profit amounting to, let's suppose, rupees 200 crore. Okay. So I've just tried to put the numbers so that you can get a brief idea as to the size of the company. Okay. Now, in respect of this company, say there was during the financial year 24-25, there was a tax demand. Okay, so income tax has raised a demand. Now, what is the nature of this? So this is around some matter which is which applies to the industry in which the company is operating. And as regards this demand, company has been disputing this. Okay, so this demand came sometime, let's suppose, in May 2024. Okay, and company went into a litigation. So company went into a litigation. Okay, and if you look at the financial statements for 24-25, company has disclosed this as a contingent liability. Okay. So if you look at the financial statements of the company, this has been disclosed as a contingent liability. Yeah. Now we have a matter which is in relation to a tax demand which is under litigation and which has also been covered in the financial statements, covered in the form of a disclosure, because contingent liability is not recognized. It is disclosed in the financial statements, and in the disclosure means that there is a note on the contingent liability. Correct. Some sort of explanation will also be there in the financial statements as around this contingent liability. Now, amount of this, or you can say the amount involved in this matter is quite significant. Okay, and what is the amount involved? You can say the demand raised by the department is rupees, say 1000 crore. Okay, now if let's suppose company loses this case, now let's try to understand the situation. If let's suppose company loses this case, company is into a litigation, so you don't know whether the company will win or lose. Correct? What if the company loses this? So can anyone think about the impact which could be there? How is this going to impact the company? Of course, it's presented in the financial statements. Means it's covered in the form of a contingent liability. But can you just think about it? That how is this going to impact the company if let's suppose the company loses this case? Over to you. Any thoughts? If let's suppose company is not able to win, okay, and this actually goes in the favor of the department, then how is this going to impact the company? Anyone quickly? Quickly, anyone? Great. Priyanshi says company will have a huge loss because the amount is quite significant. 1000 crore. So there's no doubt that the amount involved is quite significant. Company will have a huge loss. Again, there's no doubt about it. Once again, we are not saying that the company is going to lose, and that's why a contingent liability, or you can say only a contingent liability, has been disclosed. Correct. But if in case company loses, then just look at the total balance sheet size. Total balance sheet size of the company is only 600 crore. So we can say effectively the company will be wiped out. Yes or no? Company will be wiped out if the company loses this. So can you now understand how severe it is? How bad it may become for the company? Yeah, how significant this could be if this goes against the company. Further, if you look at it from the perspective of a user of a financial statements, see, contingent liabilities are very commonly shown in the financial statements. So if let's suppose a disclosure is given in the financial statements about a contingent liability, can we say it's something unusual? No. It's something which you very commonly find in almost every other financial statement. Yeah. So therefore, if the user goes through the financial statements, of course, he can read this. He may get to know about such litigation or such type of matter, but nowhere in the financial statements is this matter highlighted. We need to understand this point. And what if the user ignores this and take the decision while he is ignoring this? It's going to create a huge impact, correct? Yeah. It will significantly impact such a user. Yes or no? Yeah. So therefore, now comes the role of the auditor. Whenever any such matter will be involved, so what is it that the auditor will do? Obviously, he will perform the audit. Yeah. And while performing the audit, auditor will also want to check whether it's a contingent liability or not. Let's suppose the accounting is perfect. Okay, so as around the accounting, there is no problem. Okay, so the problem is not about incorrect accounting. So the accounting is perfect. Priyanshi says, but in this case, sir, the company may become insolvent. Yes, but we don't know whether this is going to happen or not, and that's why we are keeping it as a contingent liability. Okay, but in this case, what becomes important on the part of the auditor is that because this matter is so significant, yeah, so that's why he should highlight this matter somewhere. Okay, now comes the problem. So say if this is the financial statement. So if the auditor wants to highlight it somewhere in the financial statements, can the auditor do that? No. Why? Because financial statements are prepared by the management. Auditor has no role to play in these financial statements. Yes or no? Yes or no? Yeah. So we are talking about some matter which is there in the financial statements. Auditor has no role to play. So what is the course of action? So what is the way out? Now, way out is very simple. Auditor has got one audit report. Financial statements are not prepared by the auditor, but audit report is prepared by the auditor. Correct? Audit report is prepared by the auditor. Yeah. So now in this audit report, in respect of various sections, he will specify a lot of points. And in this case, the auditor will bring in one section of EUM. Okay, he will bring in one section of EUM in his audit report. What is the meaning of EUM? EUM simply means he is emphasizing on some matter. What matter is that? That matter is this liability. Okay, correct. So that's why now when the auditor will issue the audit report, or you can say when he is finalizing his audit report, in his audit report, he will write that you should go and look at this matter in the financial statements. Yeah. So he will give the reference of the financial statements, that particular note. asking the user to read that. So if let's suppose user is reading the audit report, he'll get to know about that there is something important which the auditor is trying to highlight and which I need to check in the financial statements. Now in this case, a couple of points become important. One, in this case, one, to say that the audit report should have a full description of such matter in the audit report. So will that be appropriate or should we be doing that? The answer is no. Why? Because what is the role of the auditor? Auditor's role is only to highlight that matter. Yeah. He's not going to write about various details in relation to this matter. No. That's not what he's required to do. Okay. He's not required to do that. So therefore, this emphasis of matter which you get to see in the auditor's report will not be too descriptive generally. Why? Because all of these descriptions are available in the financial statement. So why to duplicate that? So therefore, in his audit report, auditor will just simply give the reference of the note to the financial statements. Okay, yeah. So he'll give the reference to the note of the financial statements. And that's why emphasis of matter has a prerequisite. You can say there is a requirement for emphasis of matter. And what is that? Emphasis of matter can only be included for a matter which is appearing somewhere in the financial statements. Okay, so it has to be there in the financial statements. Why? Because only then the reference can be drawn. Yes or no? If let's suppose this matter is not recorded or say not disclosed anywhere in the financial statement, so can the auditor highlight this? No. In such a case, auditor will have to write down this. But that's not the requirement. He is not required to write down. Okay? Clear, everyone? Any questions? Priyanshi is asking, sir, he will emphasize on this contingent liability. Yes. Priyanshi is asking, so when auditor can't interfere in financial statements of the company, he will give hint to the users in his audit report regarding emphasis of matter which they should know about and which can affect their decisions. Yes, you may say that. Okay, yeah. So I would say your understanding is correct as far as this aspect is concerned. Okay. Any more questions? Any more questions? No. So let's look at one question. I think we can go to the study material. We can look at this question in the study material. Just give me a minute. Okay, so let's look at this example. Lomex Limited is a company engaged in the business of manufacture of candles. Okay, so this is about Lomex Limited, which is engaged in the business of manufacturing of candles. Okay. Now, CA Kamalnath is the statutory auditor of this company for financial year 21 22. Yeah, so that's the understanding of the audit. During the year under audit, there was a fire in the company's factory, as a result of which some of the company's plant and machinery was destroyed. So you can say some part of fixed assets got destroyed. The same was disclosed by the company in the notes to accounts, annexed to the financial statements for the year ended 31st March 22. Okay. CA Kamalnath decided to communicate this matter in his auditor's report, as he is of the view that the matter is of such importance that it is fundamental to users' understanding. You are required to comment on this. So in this case, how do you go about it? Tell me quickly. How do you go about it? What do you do in this case? Over to you quickly. Yes, anyone? What do you do? In this case, what do you do? How will you deal with this matter? I think a simple one, quickly. If let's suppose you happen to be the auditor, how will you deal with this? Shreya is saying EOM should be given. So the first point is that because it is so important that it can impact the understanding of the users. So that's why, like Alvaz mentioned, emphasis of matter should be included in the auditor's report. Okay, so that is what you will be required to do. I think same is the response from Priyanshi also. Great. Now comes the point that if let's suppose this is included in the UM, then how do you draft it? What do you write? So let's try to understand that. Emphasis of matter, effect of fire in company's factory. So the auditor will write, we draw attention to note number so and so, which it describes effects of fire in company's factory. That's it. So in this case, auditor has not explained anything. Yeah. Why? Because all the required explanations are given in the financial statement. So why to duplicate? That's why auditor is just simply saying that you go and read that. Yeah. So he's just saying that user, you should not ignore it. That's very important for you. Clear? Now here, what question may arise? That if let's suppose there's a specific matter which the auditor is just trying to highlight, which is very, very important, and we are also saying that this is fundamental to the understanding of users of financial statements. So does it mean that auditor is providing a separate opinion on this matter? The answer is no. Answer is no. Okay. So that's why auditor will always clarify in the EOM paragraph. What is that? He is saying that you should not consider that it's an opinion, and our opinion is not modified in respect of this matter. Okay. So it's not a qualification. So can you tell me why would this not be considered as a qualification? Or why it would not be considered as a modification? Anyone, quickly. Why do you think it should not be considered as a modification? Something which the auditor is writing. Why do you think this will not happen? Yes, quickly. Shreya says because the proper disclosure has been provided. That's true. Or in other words, we can say that opinion is not modified because there is no deficiency. Yes or no? There is no material misstatement. So when do you include modification? Only when there is a material misstatement. Okay? Yeah? Clear? Everyone clear? All right, great. So now what we can do is we can also look at one audit report. Okay, so what I'll do is I'll just go to one audit report. Just give me 1 minute. I'll open one audit report wherein this emphasis of matter has been included. Okay, so now in this case we have this. Now this is the report of a company. So we have this similar sort of format. Yeah, so I'm just not repeating the various requirements of the format. So we have this opinion, then basis for opinion. Then comes the emphasis of matter. Okay. Now over here, auditor is writing, we draw attention to note. So can you see this? Straight away, auditor is going to the reference. Straight away. Further, it says which describes in detail means auditor saying I'm not describing, it's already described in the financial statement. So you go and read that. Okay. Yeah. This was around this COVID-19, but again, you may have this specific types of disclosure requirements or any other type of such item which is captured there. But one point which is very important is about this sentence. Auditor is writing, our opinion is not modified in respect of this matter. So what does it mean? That you should not think that just because I have reported a matter, either by explaining or by giving a reference to items in the financial statements or various notes to accounts, you should not be considering this as a modified opinion. So generally there is a thought process. What is the thought process? Generally, we can say, generally, emphasis of matter is considered as if it's a type of modification. But do you think it's a type of modification? Can you tell me, do you think emphasis of matter? No. And why? Because for these matters, for these reporting, there's no material misstatement. Okay. So everything comes down to the material misstatement only. Fine. Everyone clear? Any questions, any doubts so far? Any questions? Okay, Shreya is clear on this. Very good. Yeah. All right. So now, emphasis of matter we just discussed. Now what we will discuss is other matter paragraph. So I remember when we were discussing about audit report, so there was a section which you call as other reporting requirements. Yeah, so there's this section. Now, when it comes to the audit, when it comes to the audit, in case of an audit, this paragraph, other matter paragraph, is different from the one that is already there. So that is about other areas or other items. Now, what's the meaning of other matter paragraph? Okay, so I think there was a point from Priyanshi. Okay, so I think we have covered this anyways. Okay, so now what is this other matter paragraph? Other matter paragraph, once again, you can say is very much on the lines of emphasis of matter. Very much on those lines. I'm not saying exactly that, but very much on those lines. Here again, the auditor wants to convey something. Auditor wants to highlight something maybe. But now the difference is that any EOM is on matters which are presented or disclosed in the financial statements. Correct? But other matter paragraph deals with such items, such areas which are not disclosed or presented in the financial statements. Okay? Yeah? So that's the understanding. So that means that if there is any matter which the auditor wants to highlight, but that is not appearing in the financial statements, not because the accounting is wrong. Now, here again, please understand, not because the accounting is wrong, but because of the fact that it's not appearing in the financial statements, and at the same time, there was no error. Okay, clear on this? Now, as regards other matter paragraph, as regards this other matter paragraph, here again, we need to understand that this will be in respect of certain areas. For example, auditor, or you can say audit of financial statements. If you apply auditing standard 600, okay, so now in relation to the, or let me just take one more example, a different one, just give me a minute. Okay, so say for example, company has got three financial years, 24, 25, 23, 24. And then of course the current year, 25, 26. Yeah. So now financial statements audit. Okay, so audit of financial statements for 23, 24, let's suppose, was performed by A and company. So they were the auditors of this company for the financial year 23-24. But maybe they completed their term or they wanted to move out. So that's why they have moved out. In 24-25, another company becomes the auditor. Say that is B and company. So now what is required to be audited here? Audit is in respect of financial statements. Now, B and company is the new auditor. So it's the new auditor, correct? So can you tell me what will be the requirements on the part of the new auditor? Over to you. Some of these requirements we have discussed. Quickly, over to you. What are going to be some of the requirements of the auditor being new? Okay, so please remember, he being new. What all requirements do you have in respect of auditor? Quickly. Shreya says communication with the previous auditor. Very good. Okay, what else? So what is your communication with the previous auditor? What else? What are the requirements when you are getting the audit for the first time? All right, so now there are a lot of requirements in respect to audit of financial statements for the first time. What is that? Because audit has to be performed for 24-25, 24-25, which will fall after the relevant financial year. Okay. Now, in this case, the audit of 24-25 will be performed. So, how do you present the financial statements? If let's suppose there will be the financial statements, so what do you do? 24-25 you will write, and for the comparative you also give 23-24. Yeah, so that is something which you call as particulars. Yeah. Now, in this case, if you look at the financial statements of this company, who will audit this? Can you tell me who will audit this? Over to you quickly. So we are looking at the financial year ended 24-25. So who will audit this? Over to you quickly. We just discussed that a new auditor is in place, B and company. Correct? Now, when the financial statements will be presented, she is saying new auditor, I think same is the response from Mars. So when the financial statements in the given case will be presented, so will it have two columns? Yes or no? So will it have two columns? Shreya says yes, it will have two columns. Now, of course, for the previous year, for the comparative year. Now, which year is comparative year? This is the comparative year. This is the comparative year. And this is the current year, or you can say the reporting year. Okay, this is the current year or the reporting year. Now, in this case, when the financial statements will go out to the users of the financial statements, so they will see two columns, 24, 25 and 23, 24. Correct? And the user might think that the audit for both the years has been performed by B and company. Why? Because the financial statements contain two columns. On the top of the financial statements, there will be an audit report. And on the audit report, there is nothing which you specify. I'm saying in relation to this particular matter. So the user may think that the financial statements are audited by B and company for both the years. Now you may be thinking, but sir, why will he think about it? Possible? But 23, 24 has not been audited by B and company. So that's why in this case, if you look at the accounting requirements, do you see any problem in the financial reporting? Means as far as the application of accounting standards are concerned, as far as preparation and presentation of financial statements are concerned. Do you see any deficiency in the given example? The answer is no. Answer is no. Okay, but in relation to this financial statement for which the audit is being performed by B and company, they want to specify this. So B and company wants that users should get to know that I have not audited the financial statements for 2 years. So that's why what will the auditor do in this case? In this case, auditor will include a para for other matters. Para for other matters. In this case, auditor will specify that the financial statements for comparative year have been audited by A and company, by another auditor. Okay, now in this case, if the auditor simply writes down in his audit report that the financial statements of previous audit year were not audited by B and company, so will that be the incorrect statement? Do you think will that be an incorrect statement? Tell me. Will that be an incorrect statement? What do you think? What do you? Quickly. Answer is no, right? That will not be incorrect. Yeah. So this is what you call as highlighting of this particular matter by the auditor in his audit report. Now the question arises that sir, if the auditor is highlighting this particular matter in his audit report, then why do you call it as other matter paragraph? How is it different from emphasis of matter? Now there comes the most important point. And what is that? What is that? For an emphasis of matter, what do you need? The matter should be recorded in the financial statements. Recorded means they should be captured. So it's not necessary they need to be recognized. So even if a disclosure is in place, that is what you will need. But this is the bare minimum requirements. Can an EM be included in the auditor's report wherein you just simply specify that this EUM is in pertaining to certain matters? We discussed no. It has to have some reference. Yeah. So that's why importance of this increases. Yeah. But now, if you look at this particular example, okay, in this example, do you think there is any accounting requirement or Schedule 3 requirement or any requirement for the management to give a note that previous year's financial statements were audited by another auditor? Tell me, do you think anywhere there is such requirement? Do you find that requirement anywhere? The answer is no. So now we have a problem in hand. What is the problem? That there's a matter which the auditor wants to highlight. Okay, so this is the matter which the auditor wants to, in a way, highlight only. But a reference for the same is not available in the financial statement. So in such a case, what do you do? In such a case, you go to other matter paragraph. Okay, in such a case, you go to other matter paragraph. Okay, clear? Clear about other matter paragraph, emphasis of matter. Any questions, any doubts so far? Almash, Shreya, they are clear on this. That's good. Anyone else? Any more questions? No? All right. So now what we can do is, just give me a minute. I'll just try to pull out one more audit report wherein we will try to find out this other matter paragraph as well. Okay. So I think in the same report that we are looking at, other matter paragraph include exists. Okay, so we'll just try to understand that. Okay, so EM we have seen. CAM will talk about slightly later. Okay, so now in this report, you see this other matter paragraph. So let's read this. Yeah, so let's read this. So what does it say? We did not audit financial information of one joint operation, which is included in the standalone financial statements of the company whose financial information reflect total revenue, okay, and the net cash flows amounting to 657 crore for the period from 1st April 21 to 31st December 21. Seems the reporting is for 9 months only. Okay. Financial information of this joint operation. Now, please remember, this is the most important part. Financial information of this joint operation has been audited by another auditor whose report has been furnished to us, and insofar as it appears to be the case. Okay. Anything which is not disclosed in the financial statement, that is something which the auditor has analyzed. Yeah. Here again, auditor is clarifying. Can you see this clarification? He's saying that just because this matter is discussed over here is required to be disclosed. So you should not think that it's a matter which will require auditor to really get into too much details. Okay, clear, everyone? Any questions, any doubts so far? Over to you quickly. Okay, Shreya is clear on this. I'm just hoping that you have also got the feeler, because these EUM we have discussed, other meta paragraph we have discussed, various types of modifications we have discussed. Okay, so in all of these cases, it's very, very important. And it's very, very important that you keep revising this. Okay, now just give me a minute. Now, now let's read the language and hopefully you will get more clarity around the language which is captured. EOM is a para included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statements that, in the auditor's judgment, is of such importance that it is fundamental to users' understanding of financial statements. What do you how do you define this other matter paragraph? A paragraph included in the auditor's report that refers to a matter other than those presented or disclosed in the financial statements. Now, can you see this language? Other than those. Okay, clear? All right, so with this, we are through in terms of modifications, in terms of some of these reporting requirements, which was about EUM, which was about other than EUM, of course, this other meta paragraph. Okay, all of these things, right? I think now what we can do is just a minute. Now what we can do is we can move on to the next topic, CAM. Okay, yeah. So the next topic we can pick up is CAM, but I think CAM will take some time. So maybe what we can do is we can take a break now, yeah, and then we'll continue our discussion. Okay, because just to start now and then to leave it in between will not be right. Huh? So you will lose out. So I think we can take a break now. Yeah, Divya, break. I think we can now continue with our discussion. So let's take some examples. Okay, so far in respect of some of these things that we have covered, let's take some examples. And with the help of those examples, we'll just try to get through in respect of these EUM, other matter, and of course some of the modifications also. Yeah, just give me a minute. Let me just open that document. Right. So now the okay. Okay, now you need to answer these, huh? Okay. Samudra Ratan Limited has a chain of restaurants across India and outside India. It has become the most preferred destination for North Indian and South Indian cuisines. It has won several awards in the hospitality industry in various categories over the years. Company is planning to get listed in India, preferably within the next 5 to 6 months. If the market conditions will not be favorable in India, then the company may plan to get listed outside India. Okay, so this is, I think, the background about the company. Company plans to expand, and that's why need funds for expansion. Company maintains very high standards, not only in business but also in terms of financial reporting. Now, considering its target of IPO shortly, it has appointed a new firm of chartered accountants, YE and Company LLP, as its auditors for the year ended 31st March 19. Team size of the previous auditors was not too big, and considering that the company appointed a large firm as its statutory auditors, okay, so the company is looking for a bigger firm, better quality. I think there was some quality constraint. So that's why a new auditor seems to have been appointed by the company. Auditor took a detailed understanding of the business and various processes, including the management controls. Uh, However, auditors, now this part is important. However, the auditors could not get sufficient information for audit of cost of goods sold. Multiple discussions between the audit team and the management took place. However, details were not found to be appropriate or sufficient. Management understood the point of the auditors. However, management also explained to the auditors that in the previous years, similar information was provided to the previous auditors. And the previous auditors were quite happy with the information which was provided to them. So the management is saying that, okay, so a discussion with the audit team is going on. So the management is telling them, see, you are new, but please understand that we have been getting this information audited for the last so many years. Okay, or this particular area audited for the last so many years. Previous auditors were also getting the same set of information. Okay, so it's not that management has not provided the information. Yeah, it's just that the information which this new auditor is asking, okay, that management is not able to provide for some reason. But they are just trying to explain him that in the previous years, audit has taken place. We have provided similar set of information, and the previous auditors were convinced. You are not convinced. Okay. However, auditors are not satisfied with this explanation. They are saying, what if the previous auditors were convinced? Yeah, so we have our some different requirement which should be fulfilled by the management, and that's how it should be looked into. Now, in this case, If let's suppose you happen to be the auditor of this company, how will you deal with this? Over to you. How will you deal with this? Over to you quickly. Priyanji says auditors should communicate to those charged with governance. All right, done. But as far as the reporting is concerned, do you think there are any reporting implications? So, in relation to the audit report, you need to comment. Okay, it's a valid point, Priyanchi, that this communication should be made to TCWG. Yeah, but still, if let's suppose the status remains same, now what do you do? Okay, so when the audit report has to go out, what do you do? All right. So I think Shreya has a valid point. Shreya is saying we have to consider whether the misstatement is material or not. So now, please remember that there are certain areas in the financial statements. For example, direct cost. What is cost of goods sold? Direct cost. This will generally be material. Okay, so to answer your question whether this is material or not, this is material. But yes, whether it is pervasive or not, that you need to assess. That you need to assess. So therefore, now you tell me what is going to be the reporting implication, or if at all you believe there will be any reporting implication. Yes, over to you. Quickly. Waiting for a response. Quickly. Okay, Shreya says qualified opinion should be given. So now in this case, let's try to understand this. COX is one area over which information is not provided. So can we say that auditor has got the required information? No. I think Priyanshi has the same answer. When the information is not provided, then only two situations are possible. Qualified opinion, if there is a material misstatement but not pervasive. Disclaimer, if it is pervasive. In this case, can we say it will be pervasive? Answer seems to be no. Why? See, because there is only one line item in the financial statements. Cost of goods sold. Okay, so it's only one line item in the financial statements, which seems to be an error. So that's why disclaimer goes out of the picture. Yeah, so disclaimer should not be the one to be considered here. So that's why, what do you consider? Qualified opinion. Okay, clear on this? Yeah, everyone clear? All right, so now let's look at one more. Yeah, so let's look at this example. Time Tech Private Limited is an Indian television and movies production company based in Mumbai and Bangalore. Founded in 2010 by two sisters, Asha and Seema. Company has annual turnover of around 300 crore. Company also creates documentaries and programming for television. Considering the nature of the business, it starts new ventures every year. Ventures means projects, shows, programs, movies for which it requires various artists who enter into the contract with the company on a project basis. Company appointed a new CEO during the year ended 31st March 18 and launched new show for the television which became very popular. During the audit of its financial statements for the year ended 31st March 18, auditors found various lapses in the internal controls of the company. Further, auditors also raised a concern. So let me just point out. So we are saying auditors found various lapses in the internal controls of the company. Further, auditors also raised a concern about the costs of the company incurred on various projects for which company was not able to provide sufficient evidence regarding the regarding the completeness of various expenses, particularly the indirect expenses. Auditors are not very comfortable because the amounts involved are high. Also, considering the fact that various new projects have been launched by the company, and there's a risk of underbooking of expenses, which may not be intentional, but the evidence is not sufficient. Management has confirmed. Now, in the meantime, if you look at the management, they have confirmed that expenses have been booked completely to the extent details have been received by the company, and they would also be fine to give a specific representation. So the management is saying that if you want, we can give you a specific representation that expenses have been completely booked, nothing has been missed out. In this case, if let's suppose you happen to be the auditor, okay, how would you deal with this? Over to you. How would you deal with this? Over to you, quickly. Yes, quickly. If let's suppose you happen to be the auditor, how would you deal with this? Here again, you need to comment on the audit reporting implications. Yes, tell me quickly. Anyone, quickly. Great, I can see this response coming from Shreya. Shreya says seems to be material and pervasive. Sufficient evidence. Excuse me. Excuse me. Sufficient evidence, it seems, is not available. Now, in this case, see, there are few problems. One, controls are weak. So, can the auditor rely on the controls? No. Therefore, extent of testing will have to be increased. Yes or no? Correct? Further, when you get on to the areas like costs, so you can say a significant chunk of P&L is costs. A lot of items will be there. Correct? As regards a lot of items, they will also have the corresponding impact on the balance sheet. Yes or no? Correct? And in respect of nature of the business the company is into, chances are also that the control lapses are there. You don't know whether the expenses have been booked appropriately or not. You're not getting the required information. Fraud risk may also arise. So we are not saying there is a fraud. Risk may arise. Therefore, it appears that no doubt the misstatement could be material, no doubt, but at the same time, pervasive. Okay. Therefore, in this case, what do? Go with the disclaimer. I think I have got some responses. Uh, Priyanshi is saying, sir, sufficient evidence is not there, it's material, there are lapses in internal control, appears to be pervasive. That's why disclaimer should be considered. Prem says management representation is not sufficient evidence. Very good. Okay, so there's a high possibility of material misstatement. Again, very good, because we are now talking about a possible impact. But the information is not available. So when the information is not available, you will say it's a possible impact. Correct? And it's more likely to be pervasive in nature. It's more likely to be pervasive in nature. So that's why one should consider the disclaimer in this case. Yeah, so that seems to be the more appropriate scenario here. Correct? Okay. Now, I think we can also look at one more. All right, so now APP Limited. Sorry, this Priyanshi is asking, sir, how do we know whether it's pervasive or not? See, Priyanshi, so far in terms of the questions that you have seen in the study, of course, okay, it's given to you whether it's pervasive or not. But in case it's not available, then you'll have to assess. And how do you assess? So our guidance remains same. You need to assess whether the impact is flowing to majority of the items of the financial statements. If not, whether the limited items over which you have material misstatement, how significant are those as regards the financial statements? Okay, and accordingly you take the decision. Fine. And Priyanshi is asking, so the questions are so big and the answers are so short. See, some of these questions which I'm just trying to discuss, they have got some unnecessary fact pattern. Company is listed, a company has this turnover, okay, or company is doing this business. Some of these things are not so relevant. So don't worry about it, number one. Number two, important thing is not that the question is big and the answer is small. At times, a question may be kept big so that your time is consumed on reading of the question. Okay, so that could be strategic, number one. Number two, as regards your answer has to be specific. You don't need to think that, oh, my answer is running into only 4 liners. I need to make 10 liners. No, that doesn't help. Important thing is, if you've covered everything which was supposed to be covered, then it's good. Yeah. If the question requires you to answer in greater detail, that you'll get to know depending on the weightage of the question. Accordingly, you'll answer. Fine. Okay, so now if you look at this company, APP, So they are saying post audit rotation. KYP and company LLP have been appointed as statutory auditors. Company has a pending litigation in respect of service tax matter which has been going on for a long time now, and exposure of the company towards the litigation is very significant. New auditors got the exposure of this case evaluated by involving their in-house tax experts who have shared a view that exposure of the company would be medium. As per the requirements of the accounting standards, medium exposure would be considered as a possible impact for which probability is 50%. Company has been disclosing this as a contingent liability in the previous years. However, the new auditors are of the view that this is a significant matter that requires users' attention by disclosing this in the financial statements, and it is of such importance that it is fundamental to users' understanding of the financial statements. Further, there is a material uncertainty in respect of this matter. Okay, demand raised by the department. So, basis this, auditors want to include emphasis of matter in their report. Okay, so it appears assessment is done. However, management is of the view that since this was not reported by the previous auditors, as you now, if you remember, in the current year, new auditors have been appointed. But this matter is not new. This matter is old. So even if you go back to say last year, last year, this matter was there in the financial statements. But the previous auditors did not include any EUM. Okay, so therefore, management has a concern. What is the concern? Management is asking that since this was not reported by the previous auditors as EOM, hence new auditors should also not be reporting any new EOM. So the point of management is very clear. Management is saying that there should be consistency. If the previous auditor have done some assessment, you should go by it. Okay, that consistency should be there. Okay. Yeah. So in this case, what is your view? What do you think about it? Over to you. Tell me quickly. What is your view? Priyanshi says, a new auditor will give EUM and okay, that complete liner about contingent liability, giving the reference to the note in the financial statements, and also specifying that the opinion is not modified in respect of this matter. Very good. But what about the previous audit? What about the previous auditors? What about the management contention? Anything if you have to say on that? Anyone else? Tell me quickly. How do you take care of the management's contention? Because they have got a point. Okay, so they are also worried. What do you do about it? Quickly, what do you do about it? Okay, so the point is, and she says, okay, fine, you go talk to TCWG. Let's suppose TCWG has the same contention. Let's suppose management and TCWG, they have the same concern. Okay, so let me just write that it's not only management, TCWG and management, both of them have the same contention. Then what do you do? Share says probability is 50% considered as possible impact on the financial statements and it is material to be referred in EUM. No, I think there are a couple of points you need to consider here. See this part. Okay, please try to understand this part. Medium exposure, probability is 50%, leading to possible impact. This is not in respect of audit. This part explains the accounting of the company. What do you mean by accounting? This part explains why this matter has been shown as a contingent liability. Okay, clear? So you should not think that this part explains that this matter is significant and therefore the auditor should report it. No, this part is only talking about accounting. Okay. How do you get to know whether this matter will require reporting as EUM, for which there is another para? Let's try to understand that. It's a significant matter. It is of such importance that it is fundamental to users' understanding. Okay, so this line tells you that this is a significant matter. And this line tells you as to why it should be reported as EUM. Yeah. Next. Next is the contention of TCWG and management. Next is the position taken by previous auditor. See, the position taken by previous auditor can always be looked at by the new auditor. But does it mean that something which the previous auditor has done has to be done by the new auditor also? Not necessarily. Therefore, the contention of the management as regards the position taken by the previous auditor, what do you do about it? You will just simply ignore that. Why? Because that's not a justification. Justification can always be provided, but this is not the justification. Clear on this? So therefore, in this case, management will management will of course disclose this as a contingent liability, and there will be an EUM on this matter in the auditor's report. Clear? Okay. So I'm just hoping that you have got some more clarity, okay, with the help of some of these examples. Yeah. Okay, so let's look at one more. KB Private Limited, large size company, they are engaged in the business of retail. Company has 150 retail outlets spread across India. Okay. Company has annual turnover of 1000 crore, profits of 250 crore. Over the past years, there has been a significant increase in the sales of the company. However, debtors balance has also increased, means collectivity is an issue. What do you mean by debtors have increased? Means sales are being made, but the collections are not so fast. So the debtors are getting piled up. Yeah. In the last 2 years, auditors of the company identified that three debtors amounting to 350 crores are not getting collected, for which balance confirmations are also not available with the company. Okay, so there is a concern as around the recoverability of three debtors amounting to 350 crore. Further, if you look at the company's process, so every quarter, every year, company should have some process of obtaining balance confirmations. So company was having such process, but in respect of these debtors, confirmations were not received. So clearly, it seems there's a dispute. Yeah, and there's a concern around the collectability. Auditors of the company have been deliberating with the management regarding the recoverability of all debtors which are long outstanding, including these three debtors. But the auditors are not convinced about the recovery of three debtors. In the given situation, auditors have decided to include an EOM in respect of non-recoverability of debtors in line with the requirements of accounting standards. Management is also convinced with this. Okay, you give EOM. Yeah. And the management is saying, don't worry, I'll give an appropriate note in the financial statements. You can just refer that. I'll explain that there is a concern around recoverability. We have been following up with the parties, and sooner or later they will make the payment. And the auditors can then highlight this in their auditor's report. So that will become an okay, emphasis of matter. So it seems it's agreed between the auditors and the management. So auditors decided to include EOM. Management is also convinced. Okay, so as such, between the auditors and the management, it's already concluded. There is no dispute. So they are fine. Both the parties are okay. Unlike in the previous example, wherein the management and the auditors had a different view, in this case, it's something wherein both the parties are on the same page. But in this case, you need to comment whether this reporting requirement which the auditor has thought, okay, should it really require an EOM or not, or if there should be some other reporting implication. Priyanshi says sales have been made on credit. So the management and auditor get to know that these three debtors will become bad debts. It is material. No, so the point is, what should be the reporting implication? So do you think EOM is good or not good? Something else should come? What is your thought? Over to you. Over to you quickly. What should you do as an auditor? If let's suppose you happen to be the auditor, what do you do? Quickly, huh? Everyone, in the given case, what do you do? Waiting for it. Okay, great. Shreya says it appears to be material because the profit is 250 crore and the debtors are 350, and those are not recoverable. Hence, the provision should be made. No, so the provision should be made or anything that should be made, that is the accounting answer. So I'm not asking you about accounting. So what accounting should be done? That's the problem of the management. I am asking you about the auditor. What should the auditor do? So there's a position of the auditor which is given. So are you okay with that position? Or you believe no, that position is not correct, something else should be done? Priyanshi says a disclaimer should be given. Okay. Can you please explain why disclaimer should be given? Okay, Priyanshi is saying, no, I do not agree with the view of the auditor. Yeah. So the view of the auditor is not correct. There should be a disclaimer. EUM is not appropriate. What about others? Quickly, what do you do in this scenario? Yes, waiting for your response. Quickly, please. Okay, great. Prem is saying auditor should give a qualified opinion because there is a possibility of material misstatement and it is not pervasive. Priyanchi says because it seems pervasive, it is material and also unable to find out as to whether the debtors are collectible or not. Confirmations could not be found. Now, in this case, please understand there's no possible error. Why? Because information which the auditor have required, they have been made available. So it's not that confirmations are required and those are not made available. Auditor knows confirmation is not there. Okay, so the confirmation is not received. So that's why all the alternate procedures he has performed. And what is the conclusion? Money is not recoverable. So if the money is not recoverable, what do? Create a provision. Has the management created a provision? No. Now considering the amount involved, will you call it as material? No doubt. No doubt this amount is material. Okay. This amount is no doubt material. So if the amount is material, this has not been collected, provision should have been made, provision is not made. So what do? You'll say there is a material misstatement. Now comes the question that is this pervasive? It doesn't seem that. Why? Because there's only one line item of the financial statements which is impacted due to this. Only one line item. Yeah. So therefore, in the given case, what should the auditor do? Auditor should qualify. So this EUM, is this appropriate? No. What should be the right answer? Qualify. Okay, clear? Then I think we have got one more. Let's look at this. Yeah, clear? Okay, so now there's this company BDJ. They are in the business of providing management consultancy services. They have been in operation for the last 15 years. Their financial reporting process is very good. Statutory auditors always issued a clean report. Auditors were required to be rotated. So RNJ was appointed as new auditors for the financial year 31st March 19. Auditors had a detailed, clear discussion with the management that they will perform their audit procedures in respect of opening balances along with audit procedures for the financial year ended 31st March 19. Management agreed with that and auditor sort of completed their audit as per the plan. Auditors did not have any significant observations and hence they communicated to the management that their report will be clean. Management was quite happy that okay, it's an unmodified opinion, and they also requested the auditors to share a draft report. And this is how things practically work. Yeah, so generally a draft report is issued first, and then the final report is given. In the draft audit report, all the particulars were fine except one para, other matters para, wherein the auditors gave a reference that the financial statements for the comparative year, means for the previous year 31st March 18, was audited by another firm of chartered accountants. Management asked the audit team to remove this para. Why? Because management is saying that you have completed the audit. You wanted to do the audit procedures on opening balances. You have done that. But the auditors is saying no, no. We will give this para in the auditor's report. So what do you think in the given situation auditor should do? Do you think currently the section, the para which they are planning to include is okay? Please also consider the fact that they have performed the required procedures on opening balances. Okay, yeah, they have performed the required procedures on opening balances. In the light of this, you need to comment. Over to you, quickly. Tell me, what should the auditor do? Other matter paragraph we have discussed, you are just required to apply that knowledge in this scenario. What should the auditor do in this case? Over to you, quickly. Yes, anyone? Tell me quickly. All right, so now let's try to understand. Okay, I can see one response. Great. Priyanchi says everything was as per the requirements. Last year's audit report was also clean. There's no need for such other matter paragraph. See, please understand this other matter paragraph is not a modification. Okay. Shreya says auditor is right here. When this other matter paragraph is given, therein the auditor will specify he is not doing any modification. Yes or no? Now somebody may think that why there is a need? There is a need because till previous year financial statements were not audited by this current auditor. So is it a fact? Answer is yes. Should the user get to know about it? Answer is yes. So if the auditor has performed the procedures, does it mean that this fact will change? Is the auditor writing anywhere in his report that in the previous year there were some errors I do not know? No, he is not using any such wording. He is just simply saying that previous year financial statements were not audited by us. They were audited by another firm. Yeah, and which is also a standardized requirement. So this para is important. Users should get to know about it. Okay, clear on this? Yeah, clear. So that's why in the given case, just to say that there is no observation, so that's why this para should not be included, will not be right. Yeah, clear? Everyone clear on this? Yeah. All right. So I think we have discussed a lot of examples around EUM, around other matter, and also around some of the qualifications. Now, moving on to the next part in the audit report. If you remember, when we discussed the audit report, the unmodified opinion, in that case, there was a section in the audit report called as key audit matters. Remember that? Yeah. We skip that. So now we'll pick up this section. Let's try to understand what is key audit matter. What is the reporting requirement around key audit matters? Okay, let's try to understand that. Now, what is a key audit matter? I think as the terminology only says, it's about key matters, means important matters. See, if you look at the audit report, in the audit report, user or the stakeholders, do they get to know anything about the audit process? No. Do they get to know anything about the challenges which are faced by the auditor during the course of audit? No. Only the outcome of the audit is something which is visible. Outcome means whether the financial statements are free from material misstatement or not. But this entire process, even if let's suppose has led to the outcome that there is no material misstatement and hence there is a clean opinion, okay, doesn't necessitate that during the year or during the course of audit, auditor may not have faced some challenges. Can we say that? No. Further, there could be some important areas which the auditor may have observed, okay, over which he's not giving any negative commentary. He's not giving any modification, but still that area, that understanding may be important for the stakeholders, may be important for the users of the financial statements. Yes or no? But how would those stakeholders, how would the users get to know about it? Because all of these sections in the auditor's report that we have discussed so far, they are all very standardized. Is there any possibility of reporting or making the users aware about any such challenges, any such matters? Is that available? Is that something possible through the auditor's report? Doesn't seem so. That's why there was a need to include one section in the auditor's report through which such communication could also be made to the users, to the stakeholders. Okay. And what was that? Key audit matters. So in this section, auditor will convey to the users what have been the key audit matters. Now, conveying key audit matters or calling a particular matter as a key audit matter, it doesn't mean there's a modification on that matter. Now, please understand this point very, very carefully. Yeah? To say that there is a matter as key doesn't mean such a matter will become a matter of concern. Doesn't mean that over such matter, auditor wants to give any qualification. No, that is not something which the auditor wants. Okay. Yeah. What is the only intent of the auditor? Idea is just to give the awareness about the audit process, about some of the audit matters which the auditor would have faced, but on which he has concluded and which have not resulted in any misstatement or material misstatement. So that's the objective. Correct. Now, the next question arises that, okay, fine, this is the objective and some key audit matters will be reported, which are important for the users of the fancy statements. They will get to know about it. We have also understood that reporting such matters doesn't mean that it's a modification or a kind of modification. Why? Because there are only three kinds of modification that we have already covered. So this is not a new kind of modification. Yeah, or it should not be considered as if it's a kind of modification. That will be inappropriate if you call it as a modification. But the next question rises that during the course of audit, there could be a lot of matters. So how do you identify which matter is a key audit matter? Do we have any such criteria available? Do we have any checklist? Do we have any listing of audit matters that if those matters were there in the company, you will call them as key audit matters? Now, in this case, there are a couple of things. One, see, this section key audit matters doesn't apply to all the companies. Okay, so it's something which is applicable to the listed companies. Second, to call a matter as a key audit matter will be dependent upon certain factors. So this auditing standard, which one is that? SA 701. A separate you can say dedicated auditing standard only on CAM provides the guidance as around CAM. Guidance in terms of how do you identify them? If you identify them, how do you report them? Okay, what all things are required to be reported therein? Yeah, so that complete explanation for CAM required an auditing standard. Yeah, so you can just understand how important this section is going to be, because there is a separate dedicated auditing standard only on CAM. Yeah. Now, in this case, if you go look at that criteria of CAM, which we are also going to discuss now, you can just try to analyze some of the matters as key audit matters. But please remember that this area is quite important. One. Second, identification of key audit matters will be a matter of judgment. Okay, so even if you go through that criteria, please remember that this will remain quite judgmental. It's quite subjective. Okay, so there's no checklist as such that you may get. Okay, on the basis of which you will just be able to tick it that, okay, if this is ticked, so reported. If this is not ticked, not reported. There again, judgment will have to be applied. Professional knowledge will have to be applied. Yeah, so that's why to report is easy. Why? Because as around the reporting requirements, the standard will tell you as to what is required to be reported. How is that required to be reported? But to identify a CAM, to identify a CAM is not easy. Okay, yeah. So I would say important part is around the identification, or the challenging part is around the identification. Further, when you identify, then of course you will report it, or you will want to report it. Yes or no? Yeah. So let's suppose if you identify any matter, so you'll want to report it as a CAM. Correct. But in such a scenario, please remember that the management may also have an objection. Why? Because generally there is a thought process. Okay, there is a mindset. Even though I've just clarified that CAM is not a negative reporting, CAM is not about modification, but still management has a thought that if CAM is getting reported, then there is something negative about the company which is going out in the audit report, which is not true. Yeah, but it remains a challenge on the part of the auditor. Why? Because there will be a resistance from the management to report on these scams. Fine. Okay, now let's try to get on to that criteria. Now, what is that criteria? How do you identify a matter as a scam? So for this, you can say there are a few criteria. One, if you remember, there was an auditing standard that we discussed on communication with TCWG. Yes or no? Yeah, remember? Communication with TCWG, we covered an auditing standard. In that auditing standard, we discussed that there are some matters which are of significant importance, which the auditor will communicate with TCWG. I'm not saying all the communications, I'm talking about significant audit observations which the auditor will communicate with TCWG. Remember? Yeah, remember? So now this happens to be one of the criteria for calling that matter as CAM. So any matter which the auditor believes is significant to be communicated to TCWG. So that happens to be one of the criteria for calling that matter as CAM. So what is the first step? What is the first step? Matters which are communicated to TCWG. Okay, now what are the matters? Auditor's responsibilities are communicated, independence, planned scope and timing, significant findings. So we are not talking about this, or this. We are talking about this. Why? Because we are talking about significant observations. Clear? Now, in case of these significant findings, significant observations, what could be the matters? Maybe there are some significant qualitative aspects around the accounting practices, which the auditor discusses with TCWG. During the course of audit, auditor is facing significant difficulties. Significant matters related to accounting, related to audit. Yeah. There's any matter which has affected the form and content of auditor's report, which could be in relation to qualification, adverse opinion. All of these are again significant observations. Yeah. Or any other significant matter. So we can say one criteria is, of course, this one that I've just discussed with you. Yeah. So this is one of the criteria. So is this the only criterion? No. Second, standard says those matters which required significant auditor's attention. Now, what is the meaning of significant auditor's attention? See, there are, or there could be certain areas which required higher assessment of, or wherein the risk of misstatement was quite high. For example, revenue recognition. We discussed that generally you will find, or in fact, this is considered to be a presumed fraud risk. Inventory could be one. Inventory valuation could be one. Maybe there are some matters over which significant judgments are required to be applied. And that could be in relation to the areas over which management has used significant judgments for accounting purposes. Or let's suppose there are some significant transactions or events that have taken place during the year. Now, on these matters, what has happened? Significant effort was involved on the part of the auditor. Means significant time was involved. And significant time doesn't mean that when you go and audit. So let's suppose there's one partner, okay, one director, say two managers, say there's a team of 8 CAs and interns. Okay, so we are not talking about time being spent by interns quite a lot. No, we are talking about time or significant time of the senior team members in the audit. So who will be the senior team members? These two, including the partner. Okay, so such matters will also be or may also be considered as key audit matter. Okay, so they may also be considered as key audit matter. Correct? Then, next, third criteria. Matters that were most significant to the audit. Now, what does it mean? It means if there is any matter during the course of audit, okay, this involved quite a significant amount whose accounting was too complex. Yeah, there was a great significance in respect of that matter during the audit. Yeah, so that matter in itself may become a matter to be reported as CAM. Okay. Yeah. Now, three criteria that we have discussed. If any of these three criteria is met, anyone, that may be reported as CAM. So it's not that you need to ensure that all the three criteria are met. No. Even if one of these is met, you will record it as CAM. Now the next question is that, okay, this is how we can identify the CAM. Let's suppose three matters have been identified as CAM. Yeah. What are those three matters? Say one is revenue recognition. What are the three matters? Revenue recognition. Let's suppose second is litigations. And third, say, is inventory valuation. Okay, so these are the three matters. Let's suppose these have been identified. Now, what do you do? Now, what is going to be the next step? Yes or no? Yeah. So, of course, you have identified. You are saying there are these three matters which you go report as CAM. So, what do you report? What do you do? What do you do about it? Yeah. So now, in this case, there are three things you will then check. But you can say there are three things that you are required to report upon. Where do you get to see this from? Again, from the auditing standard. First is that if you have identified any matter as CAM, why such matter was considered to be of most significance? Means why that was considered as CAM. Okay. So it should not happen that auditor had just thought through. He's saying, okay, these three I'll report. In the report, auditor will have to specify why these three, why any particular matter has been considered as CAM. Okay, so the basis of selection, the reason for selection, that is what you call as why, will have to be mentioned. And where do you mention this? Not in the working papers only, in the audit report itself, so that the user can also get to understand that this is the reason why such matter has been considered as CAM. Clear? Yeah? Okay. So we have got three matters. Huh? So first, you'll say in the audit report itself why the matter was considered as CAM. Yeah. Next, how? Now, what do you mean by how? How means that it is understood that this matter is a CAM. Okay. CAM means it's a key audit matter. But what did the auditor do about it? If this was a key audit matter, auditor must have done a lot of work on this during the course of audit. Yes or no? Yeah. A lot of work on such areas should have been done by the auditor. So can you tell me what could be the work which the auditor may have done on inventory valuation? Anyone? Can you tell me what should be the work which the auditor may have done on inventory valuation? Over to you quickly. What would be the nature of such work? What do you call those works as, or that work as? Shreya says physical verification. Priyanshi says perform assertions. Almaz says physical verification. So I think we are talking about audit procedures here. Yes or no? Yeah. So first, you are saying basis. Second, you are saying audit procedures. Yeah. So in this part, auditor will include the audit procedures in the audit report itself. And once again, we are not only talking about the work paper here. Of course, everything will get documented in the work paper. In the audit report itself, auditor will specify what all audit procedures he has performed on some of these areas. And why is that important? Because at one place we are saying, let's suppose the audit report is clean. Okay, let's suppose for this company, say this company ABC Limited. If you look at the audit report, so it's a unmodified opinion. Okay, so at one place, when you give the user an understanding that the report is unmodified, financial statements are free from material misstatement. During the course of audit, these three were the significant matters. Okay, so then you need to explain him that, okay, these were significant matters. You as an auditor were quite capable. You have handled these matters during the course of your audit, and you have come out with your conclusions, yeah, wherein you have concluded that there is no misstatement which is material as regards these matters also. Okay, but that is what you need to explain in detail. That is what you need to justify also. And how do you explain that? How do you explain that? You explain that through your audit procedures. Okay, so through your audit procedures, you explain that. that as regards inventory valuation during the course of my audit in relation to the particular assertion, if you are limited to a particular assertion, or in relation to any of the assertions which you are calling as CAM, what all audit procedures you have performed. Okay, that will give the user a comfort. That will give an idea that, okay, these are the audit procedures which have been performed during the year. Okay, this is how such an important area, such an important audit matter was concluded upon. Yeah, so this is how this has been looked at. And third, a reference to the related disclosures in the financial statements. Now, because these are all matters related to the financial statement, so that's why there will always be a reference of all of these pointers, all of these areas in the financial statements. Correct? So somewhere in the audit report, you will give the reference. Yeah. So now what I can do is I can just quickly help you understand this scam in slightly more detail. So that's why what I'll do is I'll just open one audit report. So just give me a second. I'll try to open one audit report. Okay, just give me a minute. So in that audit report, we'll try to understand as to how the scam is reported. Okay, some of these requirements, and then of course we'll continue on this in our next session also. Okay, because if you get to see this through an actual report, you will get more clarity. So just a minute. Okay, so now in this case, we can see this key audit matter. So let's understand as to how this is drafted. Very, very important. Key audit matters are those matters that in our professional judgment were of most significance in our audit of standalone financial statements of the current period. These matters were addressed in the context of our audit of financial statement as a whole and in forming our opinion on the financial statements. And now this last sentence is very, very important. We do not provide a separate opinion. See, the auditor has clarified that user should not think that there is another opinion we are providing on these matters. Okay, yeah, because opinion is given on the financial statements as a whole. Clear? Next. Now, then the key audit matter is explained. So I'll just move on to the point number 2 instead of this point number 1. So the point or the matter is about the impairment of PPE. So in this case, first of all, auditor is explaining why this matter has been considered as scam over here. So company holds intangible assets. Okay, company has identified passenger vehicle business as CGU. History of losses in this passenger vehicle CGU, declining sales. Okay, led to mandatory lockdowns. Management believes no further adjustments are required to these estimates. However, in view of highly uncertain economic environment impacting the automotive industry, definitive assessment of impact is highly dependent upon circumstances. This annual impairment test is considered to be a key audit matter. So auditor is clarifying why this matter has been considered as scam. Then on this right hand side, he is explaining what all procedures he has performed. Okay, so he is explaining we have tested the design, implementation. So we have done control testing. Okay, we obtained the independent valuation specialist report. Okay, a lot of procedures which he would have performed. He is explaining that. Third, he is giving a reference to the note on these matters or this particular matter in the financial statements. So he's saying go refer note to R 6A of the financial statements. Okay, clear? Yeah. So idea was to just link some of these points that we have discussed. But of course, we are not yet done. We'll just continue that discussion on this point in the next session also. Okay. So I think we can just conclude our discussion here. And now we can just move on to any questions and doubts that you may have. Over to you. Any questions, any doubts that you may have? No questions? All right. So then let's close our discussion. Thanks everyone once again for your time and for this participation that you have shown today. Thanks so much.
Thank you, sir. And students, we are continuing our chapter number 8, the audit report. If you have any question regarding this chapter or any chapter, you can ask in the chat. And students, one more advice, you should make your handwritten notes, especially for this chapter, because this chapter holds a nice weightage. Okay, and always the question from this chapter is always being asked, so it is advisable to make your own notes. Although for the revision purpose saransh book is available, it's a summary book, you can refer that, but your own handwritten notes will help you in the examination. And for this chapter, when you revise this chapter, when you do the questions, attempt this question, do it by writing. Don't just read the answers. Okay, solve the question in written. It will boost your confidence and you will see where you are lacking. Okay, and no. Okay, students, ask your doubts, please. If you have any doubt regarding any chapter, ask it. Okay, we will revert now only. And students, if you have doubt after the class, okay, regarding the subject, regarding any chapter, you can ask your doubt through the app also. Okay, there is a feature ask my query. So ask your doubt, we will revert it. And if you have, okay, I think there are no questions. So okay, thank you, students. The next class is scheduled on Friday, 9th of May. The next class is scheduled on 9th of May. So see you there. And before coming to the class, revise this chapter covered till now. Yes, Divya.